stratégies d'investissement, toutes choses de la blockchain. Any business starts with investment, whether it's angel, private equity, venture capital, or even just plain old bootstrapping. But we're talking about investment strategies for all things blockchain. Our next session is led by Lexi Novitska, who is managing partner with Acuity Venture Partners. She's going to be joined by Jules Miller, who is a partner with IBM Blockchain Accelerator, as well Matthias Ruth, who is the CEO of CVVC, one of our key partners for Africa Blockchain Week. We would also like to welcome Mikhail Hajar, who is a managing partner with P1 Ventures, as well as Ian Bolina, who is the founder and CEO of Token Metrics. C'est un panel superbe. Alors, on y va!
Thank you everybody for joining me. I was invited to join as a member of this panel, but because I am certainly not a blockchain expert, I asked if I could instead be the moderator so I could learn something. I would love all of you to please introduce yourself, talk about where you're based, and of course, why you're relevant to this topic. Jules, would you go first?
Sure. Thanks for having me, Lexi. I am Jules Miller. I'm a partner at a fund called Mindset Ventures. I'm based in the US between Nashville, Tennessee and New York, New York. I have been at my current fund for about a year. We do enterprise investing, so enterprise software, including blockchain. And then prior to that, I was at IBM where I ran the Blockchain Ventures group and launched 2 blockchain accelerators with Columbia University. So I'm focused exclusively on enterprise blockchain. So that's my spin on the world, but happy to be here and share some thoughts.
Thank you. Ian.
I'm Ian, founder and CEO of Token Metrics, or a cryptocurrency investment research company. Also working on a book called The Crypto Investing Guide that pretty much is an A to Z guide on crypto investing for both traders and investors, and also the partner of Token Metrics Ventures.
Excellent, thank you. Mikhail.
I'm Mikhail. I'm born and raised in West Africa. I started investing in crypto about 5 years ago. We set up a VC shop and we've been investing in Africa for the past 18 months or so. We haven't deployed capital in crypto just yet, but we've been actively monitoring investment opportunities in the space, and I'm thrilled to be here.
Great, thank you. Matthias.
Thanks for having us, Lexi. My name is Matthias. I am founder and CEO of CVVC, stands for Crypto Valley Venture Capital. So we are a VC company with 2 specialties. Number 1 is we invest in blockchain companies only, so in the bricks and shovels of the space, layer 2 applications, not the protocols, not the cryptocurrencies. We run a known incubation program out of Zug. This year that will happen hybrid because it's a global program. Only 10% of the deal flow is Swiss, the rest is international, including Africa, by the way. And we invest in early stage, pre-seed, seed up to pre-series A. The second specialty is we run our own operational business, which is the CV Labs business that is consisting of co-working hubs in Switzerland, in Zug, in Vaduz, and recently we opened one in Dubai. This is our international rollout strategy through these hubs. We're looking into South Africa right now. Hopefully that will be launched very soon, and Southeast Asia at the very moment. We organize conferences, a lot of events, reports for the Crypto Valley. The Top 50 report is maybe something some people know about the development here in Switzerland. And yes, we're eager to learn more about how Africa is embracing blockchain.
Great, thank you. Sorry, I'm just switching to my other device. I'm based in Lagos, so having a bit of internet issues, as is the norm. But maybe just a quick introduction for me as well. I am the founder and managing partner of Acuity Venture Partners. We're an early stage investment firm that focuses only on Africa, based in Lagos, Nigeria. Our first fund had companies like Paystack, Flutterwave, Migo, SmileID, fantastic companies that have really now become the growth stage cover stories of the African continent. And our second fund is very actively deploying primarily in Anglophone West Africa, but also quite active this cycle in Egypt, East Africa, and Francophone West Africa. We certainly have looked at a lot of blockchain-focused business models and would actively like to invest. But as I'm still learning myself, I can't really say that I'm an expert, so I'm really excited to hear from all of you. Maybe my first question, if I can just jump in, maybe first to Ian and Mikkel, because you're also very focused on the African continent, and then I'd like to hear maybe some more global views as well. What are the most exciting use cases that you're seeing that are most relevant for blockchain within Africa?
Ian, would you like to go first?
I'll go first. So I was born in Kampala, Uganda, currently based here in Austin, Texas. But in the last 2 times I've been to Uganda and Africa in general during our Africa Crypto World Tour, the 2 main use cases we're seeing in the blockchain and crypto space were, 1, exchanges. So for example, when we had an event in Nigeria, it was very tough for people to just even get exposure to Bitcoin. And being able to have a fiat on-ramp, because the local currency, the Naira, has just been pretty much blacklisted in so many different parts of the world that it's very tough for even a honest, authentic business owner to try to really become part of the global economy and hire developers overseas. And Bitcoin was really a way towards doing that. So I had the pleasure of meeting an exchange down there called Kuti Exchange. And then also payments. So basically, if you go to East Africa, M-Pesa has been very, very popular, and there have been lots of companies in the blockchain space trying to model that same model, but through the blockchain and crypto ecosystem. So those are the 2 big use cases I've seen in Africa.
Thank you, Ian. Yeah, just to build on that, Lexi, I think we've seen, I mean, just to double click maybe on both, on payments, I mean, for those of us that travel and live on the continent, I mean, you probably can testify. I mean, it takes several days to settle a transaction across Africa, usually like a minimum of 3 and up to 10 or 12 days. And the fees range from like 3 to double-digit percentage. And as Ian was mentioning, on and off ramp from crypto to fiat transactions are instantaneous. It's at a fraction of the cost. And so we've seen definitely like crypto exchanges like PiCoins and other, Bitsika, you were mentioning Kuti, take off. African consumers and Nigerian in particular, I think that's another country where they've seen the value of storing money in the form of crypto. So because of the domestic like fiat currency fluctuation risk. The model, so crypto exchange can be launched, and I think as long as you have a critical mass of like buyers and sellers, last I checked, there are about 50 crypto exchanges across Africa, 15 of which were like launched just like 2 or 3 years ago. Nigeria remains the largest market, if I'm not mistaken, and then South Africa would be second. And we've seen early signs of success. So like, I think there are, I mean, the fun fact about Africa is that over 1.4 million of people own some sort of crypto. That's the world's like largest penetration, over 0.1%. So trading volumes are relatively low, but when you normalize it per GDP per capita, it's one of the highest in the world. And Nigeria, I think, is the largest country. We've seen some indication of consolidation in crypto exchanges more specifically. So I think the first South African crypto exchange, Luno, was founded in 2012. It was bought last year, if I'm not mistaken. And there are some interesting trends we're seeing actually between the two that you mentioned, Ian, between crypto exchanges and payments. So we've seen some crypto exchanges, consumer-facing companies like CoinDirect or BitPesa, that started to shift and pivot over the past few years toward more like enterprise cross-border payment. So very interesting overlap between those two.
Thank you. Yeah, and maybe for the rest of you who've looked globally, at Africa as well, but also maybe if you have seen the most interesting use cases, especially for other emerging markets, that might be applicable for Africa that you have seen, or maybe that are still yet to come.
Yeah, I'll just say that DeFi in general is going to be interesting in every market. So there's going to be local nuances of what's relevant and what's being used. So for example, in the US, we look at payments as well, but we're more looking at cross-border finance, trade finance. I'm looking at payments within gaming, things like that. So our market's a little bit more mature, but we're still looking at payments, but just with different use cases and applications, or sometimes in the case of trade finance and cross-border payments, it's pretty global, and there's a real need for that. I think we're not really looking at exchanges as much in the US, but we are looking at marketplaces. So things like OpenSea, which are very specific marketplaces for things like NFTs and collectibles, which was just raised 23 million, led by Andreessen Horowitz. For me, looking at the enterprise space, I look at the broader category of digital assets. So that can be money, that can be tokenizing things like stocks and bonds, or real estate. But then also what we've been looking at a lot is intellectual property. So can you tokenize patents? Can you tokenize things that people own? And this includes NFTs and art and sports and collectibles and all that. But it's a much broader category than that, in my opinion, because there's a lot of things, especially in the enterprise, that you can assign value to and need to be tracked along the way. So one of the companies that was in my IBM blockchain accelerator called IPWE it's a company, the CEO is actually in France, but they're pretty global. And they're tokenizing they're putting the IBM patent portfolio, which is the largest in the world, on blockchain and tracking it and monetizing it in different ways. So there's a lot of really interesting use cases that start with an asset, and that can be a financial asset, it can be a non-financial asset, but tracking that around the world is really interesting. And I think, again, the use cases are similar. They're applied slightly differently in different markets, depending on the maturity and depending on the local needs.
Yeah, absolutely.
I can pretty much echo what you're saying, Jules, referring also to more mature markets, probably. If I look at our deal flow, we roughly screen 2,000 to 3,000 projects a year for both the incubation program and the direct investments. As I said, 90% global, decent amount of emerging market deal flow, but also including a bit from the US, UK less these days, rest of Europe. Asia, not so much. That's why we also want to tap into Southeast Asia, especially because we seek for synergies between emerging markets, right? So Africa is going to be first on our plate. Roughly 2/3 of the use cases, and again, bricks and shovels, application services based on blockchain technology. Roughly 2/3 is still the financial industry. Only 1/3 is non-financial. So that's probably also echoing most of your experiences in the space. Our thesis is based on the fact that the growth in the space is driven by retail, is driven by crypto, is driven by exchange payments, what you have just mentioned, right? And institutional grade solutions will follow. But the bricks and shovels solutions in the space will grow over proportionally in the time or in the future. That's where our focus lies. Now, when it comes to use cases for Africa, I mean, for us in first world situations, we go to ATMs, we use the credit cards, we have bank accounts. If we buy a house, if we buy land, we are sure that I can own the land, and the previous owner is entitled to actually sell it, which is different in all the emerging markets that we have just been discussing. So very basic financial inclusion, reduction of cost for trust, but also up to impact investments. If I look at the current portfolio, I think we have 3 or 4 African startups. One is in the area of impact investing, kind of servicing to large companies when it comes to also measure impact investments. Another one is about financial literacy for kids with an app that teaches them about math and financial basic know-how. A third one is now pivoting towards DeFi. So that's a bit echoing what Jules said. So I think there's many very interesting use cases that we see nowadays.
Maybe all of you, especially the ones that have been VCs looking at the broader market as well. I mean, for some of these consumer-driven, like crypto exchanges, for example, I imagine a lot of the metrics that you're looking at on engagement is quite similar, and transaction volume and all of that. But when you're especially maybe looking at some of the non-financial aspects, or maybe this is relevant to some of the financial use cases as well, how are you looking at these companies differently? How are you assessing their product market fit, their viability, and how are you also doing due diligence on the tech? And I'll just leave it open for anybody to jump in.
I can jump in because we have we had some lessons learned on this. So with my fund, we initially tried to do blockchain deals the same way we were doing our other deals, and that doesn't work. We had to pretty quickly recalibrate, and so it doesn't work for a lot of reasons. But one, because we typically invest in Series A deals, so we look for a certain financial threshold of of revenue, for example. Like usually it's about $1 million in ARR. The blockchain companies that are doing deals in the range we're doing, which is usually somewhere between like a $5 and a $30 million round, they usually don't have a lot of revenue. And so and then the diligence is also very different. The technical diligence is more important sometimes, but less important sometimes, depending on the use case and depending on the product itself. And so sometimes we'll outsource to an expert, and sometimes we'll do diligence in-house. But I think the other thing that's really different is less about diligence, is more about how you deploy capital. So instead of doing kind of $1 million, $1.5 million check, which is our typical check size for our normal deals, with blockchain, we have the new thesis of doing a lot of smaller checks and much earlier. And then when things are working, you double down on them. That is a very big shift in philosophical investment strategy than our typical fund. So if you're not a blockchain only investor, it's sometimes really hard to align the blockchain deals with what your other investment thesis, your other investment process is. And so you really just have to rethink and do what's right for the blockchain deals, because, when I kept bringing blockchain deals to the table, there were like 3 or 4 instances where, normally we would take probably 3 to 4 weeks for diligence, which is relatively fast for a Series A deal. And with the blockchain deals, if we didn't do it in a week, we'd lose the deal. And so you just have to just consider the different nuances of that particular market, and do things a little bit differently and get comfort. Like we had to, get approval from, our investment committee and our LPAC, our limited partner advisory council, just to be able to do that and have everyone buy in. So it took a little bit of time, but when we are all on the same page, it works a lot better.
Matthias, did you want to also jump in? Go ahead.
Yeah, sure. Sorry. So we're in the space since 2016, and we've been focusing on the bricks and shovels approach ever since, basically. So that's maybe a bit different. I echo what Jules was saying with regard to the ticket size, deal size, speed, and everything like that. So all of our investments have been plain vanilla equity investments, if I'm not mistaken, right? So even though we can invest in tokens, also from the fund side of things, all of our investments have been equity based. The startups that join the incubation programs, it's a prerequisite that you have a corporate structure that we can invest in. For example, of course, there we are open if you have token models linked to these equity models. We don't do that many token only deals or IDO deals or whatever they are called nowadays. Even though in the DeFi space for the moment, it's of course the only thing, right? So this is currently a change for us. The selection process in the incubation program is a 7-step process. With lots of interviews with the founders, it's very extensive. The problem is, of course, that I have an echo right now. Okay. The problem with the incubation program, the stage that we are focusing is the ability to deploy money in such cases is a limited amount of time. As these companies, they grow fast, and sometimes you lose them because it takes time until you have screened all the applications and they don't fit your incubation program anymore, right? So then we would switch to the select investments. That's something that happens, but we still spend a lot of time with the founders, and we have a lot of experts here. We are here running an a co-working space with over 150 blockchain startups that are based out of this location. So you have a lot of peers, and you have kind of also a vetting system here if new projects come to Switzerland. So you hear about these projects, and vetting goes quite fast, I have to say. And there we have the technology experts that sometimes are needed, sometimes aren't, where we can pick the brains that we need to.
This brought me into one other question, and I'd like to hear from all of you on your firms or your personal philosophy on investing in tokens. Do you have a policy that enables that, and or not, and why or why not?
I'll go. Yes, I mean, so for us, we're pretty much tokens only. We have made a few equity investments, but over 95% of our investments are purely token based. And we think the token economy and ecosystem is really the future. And I think it's also just easier as an investor being able to have an option in terms of when you liquidate your investment. Now, with us, in terms of doing the due diligence behind crypto assets, we typically like to first go through what we call fundamental analysis in crypto, basically a value investing approach. That's going through the typical requirements of the team's background and making sure that there are no signs to any potential bad investments. But we then like to follow that up by doing in-depth code reviews. So very rarely do we double down into a project without having a chance to actually go through their code. So having our blockchain engineers go through the code and basically doing our own internal audit to make sure there's actual solid technology. So I would say we do like doing early stage investing, but in terms of doubling down and going deep into any particular project, we always like to make sure the code is solid based on our research team.
Got it. Interesting. Does anybody else have any comments?
We can't invest in tokens with our current fund, and so again, we do equity only because that's, again, we're a enterprise software focused VC fund, about 50 million with this third fund that we have right now, and we could, if there was a strong argument, with every VC fund, you can kind of get away with doing things that are off thesis for about 20% of the fund. But we really do need to get clearance and get buy-in from our LPs, which right now we haven't made the case for yet for token investments. We're still focused on equity only investments. So at some point, and you see several funds do this, is they split up a fund between equity only and then tokens. And so I think that there, for example, there's a fund that does equity only with their existing fund, and then they have a separate, actually off balance sheet investment for investment pool of capital for the tokens. And what's been really interesting in the space, and I don't think there's a clear answer, you have to build it into your thesis, is where does the value lie? And with some companies it might be the equity, with some companies it might be the tokens. Different people think the value is in different places, and it's really hard to tell at the beginning. I've done personal investments in deals where it's partial token, partial equity, and the jury is out where you make money. I mean, I do think the liquidity of the tokens is really interesting, but that's also not the traditional VC model, right? So it kind of goes against the philosophically, the traditional VC philosophy of long-term capital and patient capital. And I think that is just something you need to have a real self-realization on, is how do you want to be investing? Are you and what are you good at, right? Because investing in tokens is a very different type of investment philosophy and strategy and application than investing in what would be considered typical venture capital deals.
I can second that point as well, Jules. My question would have been, how did those investments where you would have both equity and token allocation really work out, right? Because I haven't seen that yet so far. It's either you have the equity that turns out to be the thing that works, or the token one, and we seek alignment between the two, but to be honest, I haven't really seen that working out that well. So even though people keep working on that, and for your initial question, why token? What is special about investing into tokens? Well, our perspective here is also because we have been through the whole ICO craze, which was really specific in Switzerland, where the first money went into most projects that were based out of Crypto Valley. And we've seen, I think we've screened in this early days, 16, 17, in 6 months, thousands of projects. And the quality overall was so low, right? So that you are a bit more, maybe a skeptic when it comes to these new models that arise today. I'm not saying, of course, that you have an evolution in the space and everything is more mature, but sometimes, and this is my opinion, the money you can make through token fundraising is a bit too easy, and this is sometimes a bit reflected in the projects that we see. So as soon as you try to have a discussion around, do you have equity? How do you link the token proposition to the equity proposition? Then the conversation becomes interesting in most of the cases.
Interesting. So I want to shift gears a little bit, probably more relevant for Mikhail and Ian. There certainly are a lot of barriers that are hitting both of our crypto exchange companies and probably a lot of the blockchain-based solutions, like around property registration or other maybe legal-based solutions that might come into play. I want you to maybe address what you think are the barriers, whether that's in talent, finding blockchain expertise, or regulatory risk, or if it really comes down to, in some cases, maybe the maturity of the overall industries and the ecosystem.
Sure, happy to take this on and let Ian build on some of the points. I mean, look, talent scarcity is real, although I feel like we're at a pivot point, and blockchain and crypto more specifically is attracting more talent. I think regulation and compliance, as far as we're concerned, has been the most acute pain point. And we talked about DeFi and we've seen specifically like in Nigeria recently, I think it was last January, a crackdown on cryptocurrencies, and that affected quite a bit the development of some of the startups. Although it's changing. When you take a step back and you look at the broader sort of African ecosystem, I mean, it's pretty exciting what's happening. I feel like there are regulators like in Ethiopia, for instance, that have been having a much more progressive approach with the Ministry of Education, working with the Africa Cardano program. And we talked about DeFi. One of the applications they were looking at is like digital identity, and there are over 5 million, I understand, of like Ethiopian students and teachers that will essentially get those digital ID and will be tracked through the Atala Prism. So in a sense, even that is changing pretty fast. So talent, definitely at a pivot point. Regulation, still feeling some pains, but changing slowly and have some light at the end of the tunnel. I think security, maybe one last one. I think in general, specifically when it comes to like financial applications, like in crypto, custodians are highly exposed to cyber attacks from hackers, and that's another one where another of the sort of barriers that we should keep in mind, although that's probably a global one. Ian, I'm not sure if you have anything in particular if that resonates.
In terms of barriers, I haven't really had too much of a working relationship with all the different parts of the blockchain ecosystem in Africa. I've mainly been there on business trips, but from people I've met there, I would say one would be just really educating the governments there on blockchain and crypto, telling them that, hey, this is not a scam. And then also dealing with past scams like OneCoin and others that people have had to deal with, to a point where now it makes it tougher and more challenging for genuine blockchain entrepreneurs to try to really build something in Africa, because now you have regulators who don't really understand it and think maybe crypto is a scam. I would say talent is definitely a challenge everywhere in the world, even more so in Africa as well, just being able to find the right talent and recruit them there. or just educate them there. And then I would say also capital, being able to have more investors, more VCs in Africa and investing in projects there. And I think when you have more blockchain and crypto success stories coming out of Africa, then you'll have even more capital flowing down there.
Yeah, I certainly agree. But I wonder if to be successful, and probably crypto exchanges aren't necessarily as relevant, or payments companies, but I wonder if to be a successful investor in a lot of blockchain solutions, you need to be a specialist. So you need to be first a specialist of the Africa environment, and then of the solutions and the technology themselves. But maybe I'm wrong. I'd like to hear if you guys think that might be the case.
I don't think so. I mean, I think you definitely do need somebody who is a specialist. If anything, I think it makes more sense to team up with people who are already specialists in whatever region you're in, whether it's in East Africa, West Africa, South Africa, North Africa, and then slowly over time develop that expertise by working alongside them, almost kind of like having channel partners.
Yeah, I echo that. I think we like to work really closely with a few specialists and advisors. Actually, very similar to what Jules was saying. I think another approach we may adopt is to basically revise accordingly our investments and due diligence process to cut smaller checks faster and just learn quicker. I think that's a great way to build institutional knowledge about crypto. Along with, of course, investing in coins. That would be specifically the ones that have like value add protocols like Ethereum. We talked about Cordoba, or others that have potential for more use cases than just storing value at Bitcoin.
I think it's really, if I may add to that, it's really a bit also from a government perspective. If you look at this movement or this technology revolution, like if you look at it like an entrepreneur, right? So I think you have two choices. You develop yourself, or you wait until something is developed and you buy it, right? And because it's happening anyways. CBDC is happening. You have to take a closer look. And you know, you cannot really, it's like the people who said, when is this Facebook going away, right? And a lot of people know it's never going to go away anymore. And that's the same with blockchain technology, and also with digital currencies, cryptocurrencies. But what you said, Ian, I think it's...
Is it the same with NFTs?
Maybe it's the same with NFTs. Yeah, it's just another use case of blockchain. But what is of course true is that you have to educate the ecosystem, right? So because you are in a different development stage, and you know, in Switzerland in 2016-17, this meant after, when you were talking about blockchain, it took you, I don't know, 1 minute and 30 seconds, and you were discussing terrorism financing and darknet, basically, right? That's all you could discuss with regard to Bitcoin. You couldn't discuss use cases. That has changed a bit now, and use cases that are non-financial based, they're a good door opener for governments. And when we were approaching our Africa initiative, CVC Africa, for us it was clear that we need to have a public-private partnership, and we've partnered with Swiss State Secretariat for Economic Affairs for economic development, in order to be able to also tackle everything that's related with the governments, from regulatory perspectives, education, and everything, because at some point you will end up discussing these things anyways, right? So, and that's the partnership that we have been building and talking to local governments, besides actually just trying to invest in the most promising companies on the continent.
I would just jump in and say that I agree with Ian. You don't have to be an expert. And actually, I would take it to the next level and say no one's actually an expert. Besides, you know, if you go especially outside of the cryptocurrencies that have been around for several years, there is no real winners yet, right? You can't be an expert if you haven't had a big win. And we're still at a very early stage of maturity in the market in a lot of these use cases. So while people might say they're an expert, they really, you know, I think that there's just not enough of a track record, and the industry is still too immature to actually have those experts. What you do need is to have enough understanding of what you're doing to to not make stupid decisions, right? And so I think that's not necessarily expertise, that's just kind of managing risk. And so you have to know enough to kind of have a thesis on it. But then, you can become, and this is the beautiful part of any emerging industry, but especially with blockchain, is you can become an expert pretty quickly, or what was considered an expert in the market, by making a couple of investments. You learn really, really quickly by putting some money down and working with a couple of companies. So for example, in the NFT space, no one was really an expert at first. If you have 2 or 3 investments now in the NFT space, all of a sudden you're an expert, and that can happen within 6 months, right? So I think the question is, what is an expert? And I don't think there are really any true experts in the same way we have like fintech or health tech experts in the other areas that we invest in with our fund. And you have to get comfortable with that. You have to get comfortable with putting down capital in areas that you feel a little bit less comfortable with your personal expertise, and actually the expertise of the people you're, calling for diligence and bringing in to help evaluate the deal, because there's just so much uncertainty and so much newness to this space that, you have to, it's more about managing downside risk and managing the fact that like Ian was saying, like, is this, is the code good? Is the team good? Is there any weird, like, fraudulent activity or sketchiness to the deal? And that's pretty much the type of diligence we do. Whereas, and do we believe in the use case and the upside potential of it, rather than some of the more intensive diligence we do in other sectors, where we really do bring in experts who've been working in the space and, have seen wins over 20 years. That just doesn't happen in blockchain right now. I think we're about 40 minutes, and that was our time slot. So perhaps we maybe do a quick leaving everyone with like one word of wisdom for investing in blockchain, and we'll see if Lexi joins us again. If not, we'll wrap it up.
Sounds good.
So I'll start. I'll just say blockchain is new. It's interesting. It's exciting. Put some capital down. That's how you learn.
I love it.
Thank you so much, guys. I got back in just in time. Looks like our time is up.
Lexi, we were just going around and giving a final word of advice and suggestions for investing in blockchain.
I'll go. I mean, blockchain and crypto is the future of money. We always tell our audience not being in crypto at this point is almost a financial crime. But start slow. You don't have to go all in. Just dip your toes, and as you get more comfortable with the space, then you can invest even more.
I like it. What Jules was saying earlier reminded me of like a quote from Reid Hoffman that passed on Square Deal. I think sometimes when you have domain expertise and you've been in a specific field like fintech or like blockchain in this case for too long, you miss out actually on the most exciting opportunities. So I think exactly what Ian says, deploy some capital slowly but surely and learn.
I have 2 different messages for the level of development of the respective regions. For emerging markets, I would say invest in blockchain because it's much more than technology. And for the more developed economies, I would second Ian's quote, and I'd say it's the future of capital markets.
Great. Well, thanks for having us. Enjoy the rest of the conference.
Thank you so much for hosting. Yeah, great to meet you guys.
Bye.
Bye.
Bye-bye.